Hi, and welcome. This is Brandon Wendell. I'm the lead instructor of the E-Mini Think Tank, and I wanted to go over a couple of opportunities that happened today in the live session of the E-Mini Think Tank. And before we get started, just need to remind everybody that we're not broker-dealers or investment advisors. I look at the different markets in a live market environment, but I don't recommend anything. Basically, everything we do is for educational purposes, and I'm not telling you to buy, sell, or hold any of these securities. All trading and investing does involve risk of loss. No matter what you do to try to minimize that risk, you can never eliminate it, unfortunately. And let's see, also, we are not subject to trade restrictions. We can have a position or initiate one in a security at any time. So at the beginning of every session I do for the E-Mini Think Tank, I come up with a bunch of different ideas about where the markets are going to go. And I share these in a trade kind of a prep sheet like this. As you can see, this was from the 4th, Monday the 4th. And there was a trade on wheat, a trade on the euro. Those are what we call swing trades, where we're looking at longer time frames. You don't have to get into those trades immediately. The entry point may happen in a couple days or maybe even within the same trading day. But we go over these as an educational standpoint. You can see I always identify the amount of risk per contract so we can adjust this by possibly taking more or fewer contracts or even using the micro versions. The one I want to focus on is the bottom right, and that is the S&P futures. Prior to the market opening, I identified that there was going to be a selling opportunity on the futures, the ES, at about 43.41 to 43.49. So when the market opened and a session started, we were all ready to go because you can see prices came right up to that level just before the open at 9 a.m. That's when this candle ended. So initially it looked as though, wait a minute, we might have missed this opportunity, but we just have to be patient. And what happened was prices came back right here, as you can see, into that zone once we were ready at about 9:40, well, between 9:30 and 9:45 in the morning. So we didn't actually miss the opportunity. We were able to get in at what we call a supply zone here. And my first target was this 43.1175. The second target is at 42.6750. So the reason why I have multiple targets is psychologically, it makes it easier to hold on to your second target and get bigger profits if you've already been paid. So a lot of this, we deal with the psychology of trading and how to overcome some of your mental deficiencies. We talk about this in the E-Mini Think Tank and have a lot of suggestions and things to help you to become a better trader, more consistent. It's really what it is. But getting back to this opportunity, we looked at the market, it came into our zone, everything was green light to go short. So we sold the contracts, 2 of them. First one went right to the target. Whoops, sorry. Went a little ahead of myself there. You can see we dropped dramatically right into the target. These are 15-minute candles, so that took less than an hour to get to that target number 1. And then all we had to do was adjust and use a trailing stop to maintain our move to the downside. I ended up getting stopped out right about here as you saw buying pressure coming in. It's unfortunate, but again, I walked away as a profitable trader. It eventually made it all the way to the target. And it is what it is. Like I said, I don't complain about making money. You take a look at, if I look at my history for today's fills, the first trade, this was done in a different account, so that's not one I'm looking at, but these ones under E-Mini Think Tank, we had one losing trade that we started off the day with, and that was on the NASDAQ. As you can see, I tried to buy the NASDAQ, ended up selling it for a loss of $625 on 2 contracts. Now, that was a small loss in comparison to what we ended up doing. So we maintained small risk amounts, manageable risk. And again, you could have done this on a micro version of the contract rather than the full size and taken even less risk. Either way, it didn't matter because we ended up going with a sell order here on the ES. And as you can see, ended up closing out that position. There were 3 contracts that I did. And the first exit was for $1,400. The second one was for $4,487. So, that little blip of the $600 loss was lost altogether because we were ended up focusing on our wins. We had the large wins, which took care of the small losses. So that's what we need to do when it comes to our trading is maintain discipline so that way we can manage our losses and overcome them. Had it gone the other way where I took a large loss, it would not have been easy for me to overcome that with the winners. So we make sure to dig small holes. They're much easier to climb out of. Anyway, if you're looking for some more discipline and some more help in finding trading ideas and opportunities and even strategies that you can use on a regular basis, please click the link and join me in the E-Mini Think Tank. We'd love to have you. We meet 3 days a week live in the markets. Everything's recorded. So if you can't make it live, you can still watch the recording and take advantage of some of the swing trades as well. And just learn some of the disciplines that help you become a better trader. I look forward to seeing you.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.